I said, imagine if you had a donor advised fund that grew over time to $10 million and you gathered your kids and your grandkids every Thanksgiving and you said, we're going to give 5% of this $10 million away. We're going to give a $500,000 check to three or four or five, let's say five different charities. And all the grandkids, you all get to bring your favorite charity and tell grandma and grandpa about it. And all of a sudden, the grandkids are thinking really seriously about what's the best charity and what do they care about most.
Hey, Joe, I am more charitable. Let's just imagine I'm more charitable, or at least with 50% of the, $50 million exit. Like, what if I wanted to do a $25 million donor advised and $25 million, DST or mixture of the other ones? Walk through the donor advised fund, Joe.
Yeah. So a donor advised fund is we talked about the charitable remainder trust. We talked about the pooled income fund. Now we're going to talk about a donor advised fund. This is a non-income producing asset. So this is pure charity play. However, every dollar you give to the donor advised fund does two things. You don't pay capital gains on it, and you're going to get a dollar for dollar tax deduction. So, and it's something you manage personally. So my family has it. It's the Walters Family Foundation. It's a donor advised fund. It's a vehicle that invests your money and grows it over time and can receive appreciated assets, stock investments, LLC positions, real estate. And so you can move assets into this and you can grow it. And then anytime you're ready to send money off to a qualified charity, 501c3, then you say, hey, it's called a grant. Send a grant to Salvation Army, for $50,000. And here's the beauty of this from just a legacy planning for our clients. A lot of our clients who have 50, 60, $100 million, one of the challenges for them is saying, do I want my two kids to suddenly receive 50 million each? Is this going to be beneficial to them, or is this going to hinder them or hurt them in their life? So a lot of them really think about this, and we talk to the kids, we educate the kids of how to best steward money. But I said, imagine if you had a donor advised fund that grew over time to $10 million and you gathered your kids and your grandkids every Thanksgiving and you said, we're going to give 5% of this $10 million away. We're going to give a $500,000 check to three or four or five, let's say five different charities. And all the grandkids, you all get to bring your favorite charity and tell grandma and grandpa about it. And all of a sudden, the grandkids are thinking really seriously about what's the best charity and what do they care about most. Maybe your granddaughter cares more about, protecting wildlife, while another one cares about veterans. Another one cares about, the needs of people in different countries. So they all bring their story, and then you say, okay, I really liked our favorite one was this, and here's why. And we're going to allocate 500,000 this way, 20%, 15%, 10, and you just start allocating it out, and it's a meeting. It's a family professional meeting. It gives kids a better understanding of money. It gives them a better understanding of purpose and legacy and charity and needs and how to bless people with what you've been blessed with. It's deeply meaningful, and it solves one of the biggest problems with wealthy families. Is generation 3 is the one that will typically lose the money in a very sad way because they didn't get to see how much blood, sweat, and tears went into building it.
Wow, I absolutely love that. Yeah, I call the family board meetings, right? And using the donor advice fund as the core way to facilitate and execute on the vision of giving and keep making a legacy and get everyone together.